Hello everyone, welcome to another webinar session of ArgusFX. It's Friday, a really nice day for everybody. The weekend is coming over so that everyone can have some good rest and get some nice energy for the new week. Today's webinar session is really interesting in the sense that we are going to see how do we actually execute a trade. So we're going to see what are the major ingredients that will help you to start trading like a pro. But to be able to implement this strategy the right way, you must have discipline, patience, and believe in the settings. All traders have different strategies in place, but at the end of the day, with 1 or 2 or 3 losses, they give up on their strategy. But this is not how a trader, let's say, should consider a strategy. A strategy cannot always win. If you are willing to accept this truth, then you will succeed in the Forex market. A good percentage rate of a successful strategy, it's 70% accuracy. Because if you are 70% of the time right, or even 60% of the time right, then you will achieve a long-term consistency with your trading account. And I repeat, there is nothing, a strategy that can be 100% accurate. Because it goes like this: you might win 9 trades, being 90% of the time correct, and it only takes 1 trade to destroy the whole account. But if you are implementing a strategy the right way, with your stop losses, with your take profits, then for sure you will be consistent in the long run. Because the majority of traders nowadays, they go always through the so-called beginner's cycle. They use a strategy, it goes well for a period of time, and after some losing trades, immediately they give up on this strategy and they try to find out something more, something new. So do not aim for high accuracy, aim for consistency. And what will drive you to the next level as a trader is the repetition of your strategy, especially during difficult times. So our today's topic is start trading like a pro, the basics to know. Let's see. An introduction of our today's host, ArgusFX. As you already know by now, ArgusFX is an STP-ECN broker where as an STP-ECN, the broker benefits from clients' trading volume. In other words, the broker aims for a win-win situation with the client or the trader. Some of the major benefits of ArgusFX is the MT4 trading platform, customer protection, regulation, very good spreads, no charge on deposit and withdrawals, instant funding and withdrawal, which this is the most important part for a broker to the client, multilingual support, expertise, coaching, updates, and another important ingredient, security of funds. So the conclusion is that an STP-ECN broker is the first step to fairness. Let's see now our today's topics that we are going to go through. The most and first important ingredient to start trading the markets is mental preparation. You have to be mentally ready to face the markets. Always have a plan. In life, even in business or in personal, in the personal area, we must have a plan. Number 3, what type of trader are you? Are you a short-term trader? Are you a long-term trader? Risk and money management, which is something which the majority of traders do not apply. What they focus only is when they will enter a trade, but not how they will manage their capital, their balance, because at the end of the day, it's your money. Then we have the features of successful traders. What are the characteristics which successful traders have? The 4 stages to trading success. So what are the 4 elements that every trader should have in mind before placing a trade on the platform? Then trading the euro dollar, and we are going to see a chart on how can we predict, in this case, the euro dollar or any other currency pair. But for simplicity purposes, we have the euro dollar, and is a trade or a signal which actually reflects today's date. So we're going to see what signal did we get and how the trade went along. And finally, the strategy settings. And you may ask me, but why are you providing these settings? Because every trader will use this strategy in his or her own way. And this is the strange thing in the Forex market. We have, let's say, 10 traders having one strategy, and all 10 traders will use it differently. And only a small percentage of these 10 traders will be able to apply this strategy the right way. So it's not a matter of, let's say, the settings by themselves, but it's also a matter of money management, risk management. It's a matter of balance. So all these things we're going to look at in today's session. Let's start with our very first slide. So you're going to see it's going to be some key points before we move on to the actual chart. So mental preparation. Do not trade funds or money which you cannot afford to lose. And why? Because if you start trading money which you truly need, you will make mistakes because you're going to try to make money fast. And if you try to make money fast, then it's better not to trade at all. Think of the markets from a long-term perspective. Look at it as a long-term budget, step by step, making money time by time, not within a day, within a week. Because for sure, it means that if you try to see this industry, this profession from a short-term perspective, then you will do either you will over leverage your trades, you will place more lots, try to make the big move, and at the end of the day, there will be no funds left in the account. Stay calm at all times. In other words, if you have your stop loss, there is nothing to worry about. There was a wrong prediction, that's it. No problem. We can trade the next day. There is a lot of traders which they constantly move their stop loss far and far and far from their point of entry, hoping that it will reverse to their favor. But in the Forex market, we cannot hope. Hoping is not a way. Hoping is not a strategy. Another thing which we all of us went through, blaming others for our decisions. It happened many times to all traders. When they've made a wrong trade, their mood goes down, their psychology is very bad. They blame everybody, they blame their friends, their family, they're not in the mood. Never blame others for your decisions. You took the decision to trade. Take responsibility of your account. So if you are responsible, you'll say, I have this balance, I will trade this balance, and if I'm able to redeposit, I will redeposit. If not, I should perform an appropriate money management on my existing balance. Perceive trading as a part or full-time job and not as a hobby. Because the majority of traders, they say, I have my job, I will trade as a hobby. No, look at it as work. Because if you don't see it as work, it means you do not see it as something serious. And trading the markets, it's also a profession. And something which everybody went through, getting overexcited when something goes very well. So you've made the best trade. So you go out on a Saturday and you start telling everybody, I did this, it was a fantastic trade, I made this much. No, you will lose focus. Because if you tell others, you will put pressure on yourself to achieve even more, to do even better. And this pressure will make you lose your focus and make mistakes. And always trade cautiously. Trade with safety. And as we said, always have a plan. And you must ask yourself some questions. How much am I willing to lose should my trade goes wrong? What is the stop loss I'm willing to accept psychological wise? 50 pips, 60 pips, 70 pips. What is the stop loss that will make me and will allow me to sleep at night? What is the level of investment that will make you trade comfortably? How much can I put in the trading account? $500, $1,000, $5,000. And in the scenario where your trade went right, what profit target will satisfy you the most? Because you see, a lot of traders, they say 50 pips, I'm happy. As soon as the price approaches 50 pips, they move the profit higher and higher and higher. And if the prediction was wrong, it goes against them. And instead of having a profitable trade, they end up having a losing trade. Deposit an amount. We have the before bullet point. What is your long-term target? So what target do you have? In 1 year, to convert my $500 to what? A correct amount, not fantasies. Because if you have a long-term target, you will stick to your plan. When will you be withdrawing funds from your account? Because it's not only to make profits or increase your balance. Withdraw some time to feel the funds in your hands, to feel that you've made some money. It will motivate you. Deposit an amount that will not stress you at the start. And thereafter, deposit gradually as your account grows. So if you placed $500, you made them $700, deposit a bit more, another $100, an amount that you will feel that you can deposit a bit more. And always, but always follow your plan. Because, as we already mentioned before, what will drive you to the next level is the repetition of your strategy. So follow your plan always. Let's move on to this interesting slide, theoretical, but it was really helpful to identify within you the type of trader you are. So we have 3 types of traders. Are you a scalper? So if you are a scalper, you will be trading on short-term time frames. M1 mostly, M5 and M15. The majority of scalpers trade the M1 time frame. So if you are a scalper, you will open and close trades within minutes. You will be taking advantage of small price movements, and you will use large amount of leverage, which this is not something that will help you to progress. So in my opinion, scalping is something that you will need either to have an automated system, which again, automated systems are not the holy grail. If you are not there to follow your plan, nobody else will do that for you. So the scalping methodology is a high risky one, because imagine to place a trade just to win 5 pips, and all of a sudden that trade to turn against you. Maybe you will not be even able to close your loss at the minimum. So scalping is something which needs a better and deeper research. Are you a medium-term trader? And this is my favorite trading style. If you are a medium-term trader, you hold your positions for 1 or more days, and you take advantage of technical situations. So you actually try to predict price movements on the chart, and you are using the time frames of M30 and H1. And the strategy which I'm going to show you towards the end of this webinar is using M30 and H1 time frames combined. And finally, are you a long-term investor? If yes, you will be using longer time frame charts such as the H4 daily and upper. In this case, as a long-term investor, you will be holding positions for months or years, and your decisions will be mostly based on fundamental factors, which again, I am not a believer of fundamental factors, because if you wait for an event to take place, then already the movement has gone. Let us go a bit back. Okay, so the most, let's say, decent trading style is the medium-term trading style. You place your trade, you hold your position for 1 or more days, and you read the charts. The charts say everything. Okay, now we move on to the spice part of a strategy, which the majority of traders do not apply: risk and money management. Managing risk, which risk is your money, it's a major challenge. And when we say risk and money management, we focus on our exit criteria, such as our stop loss and take profit. So every trade that we place on the platforms should have a stop loss and a take profit to safeguard the trade itself and our balance. A safe investment means long-term consistency. So if you apply risk and money management, you will last in the Forex market. You will not drive yourself to the beginner cycle. And always have a formula to increase the level of your investment gradually. So you must have a plan based on your balance. What is the lot size which you are going to invest? For example, if you have a balance of $1,000 and you trade the euro dollar, a safe risk factor is 0.1 lots, $1 per pip. And if you have in your mind the figure of $1 per pip, it means hypothetically that for my account to vanish, to lose all my money, the trade has to go 1,000 pips against me. Is there any of this chance to happen? Of course not, because you have invested safe. If you have a balance of 1,200, 0.12. If you have a balance of 1,500, 0.15. If you have a balance of $2,000, 0.2. So you see, always leave a big margin to trade with safety, to trade without stress, to be able to sleep at night. Because a lot of traders, and even me and everybody, there were times that, of course, we were on our computer, on our trading station. You couldn't sleep. You were watching your laptop all the time. What will happen? But if trading will interfere in your personal life, then it's better not to trade, because it's influencing you and the people around you. What are the characteristics of successful traders? Which is a very small number. Discipline. They were disciplined to their strategy. They have learned from their mistakes. If anybody says that he never made a mistake, it means that he or she has never tried. Because it's through mistakes that we are learning. It's like when somebody goes to the university, he's paying the university to learn. So there is a learning process where everybody should go through. So if you haven't made any mistakes, it means you haven't tried a strategy. Everybody lost money at the beginning. There were people that they have lost entire payrolls. But I'm not telling you to reach that stage. But what I'm telling you is that if you don't lose money, you will not feel the pain of losing that money. And if you don't feel this pain, you will not try to learn. Successful traders have a business mindset. And as we said before, they do not see trading as a hobby. They see trading as a business. And when you see something as a business, you accept the fact that you're going to have some losses, some expenses, and after some profits, of course. And let's distinguish now two types of characteristics. Quantitative characteristics. Quantitative characteristics is what we have in front of us to trade, let's say. Price action, indicators, stop loss, take profit, fundamentals, and so on. But what every trader is different from one another, what each trader has a uniqueness on, is on the qualitative characteristics, such as discipline, patience, risk and money management, and so on. So every trader is unique. Every trader has a different mentality. So if you give a strategy to 10 traders, as we said before, every single trader will use this strategy different way. And one major feature of successful traders is that anxiety, fear, greed, and impatience is no longer an obstacle. So these features is what characterizes the successful traders. And we are approaching our strategy. This is the last slide before showing you a chart and how do we speculate movements on currency pairs. The 4 stages to trading success. As we said, number 1, money management. What is the lot size invested? How much are you be willing to invest every time you place a trade? Entry strategy, price action, reading the candlestick bars, and tools, point of entry. You see, I'm avoiding the word indicators because indicators by themselves, they cannot show you what to trade. Because the majority of people, they trade the obvious. They trade what they see. But if the indicators were there to indeed help you make money, then why to have indicators there? So it's a combination of price action and some tools that will help you to see the non-obvious. To see the non-obvious. The third bullet point is risk management. So what is your stop loss and your take profit? And finally, psychology. There is always a next day to trade. Do not, let's say, put all the eggs in one basket. Do not trade all your balance in one day, because there is also a next day to trade. After reading all these theoretical but major elements that professional traders have, we are going to move to a slide which we are going to see how we are applying a strategy that, when implemented the right way, it will make you a long-term winner. And I will be explaining step by step to understand these charts. And in any case that you may have any questions, you can send us an email at the end, at the last slide, and we can also contact you so that I can explain in more detail something which wasn't clear. In this slide, we have two charts on the euro dollar, and you can see that the main slogan of this slide is observe the masses and do the opposite. Because as we all know, what the majority does at the end of the day leads to losing trades. But what the minority does leads to profits. So let's see these two charts step by step. And I also have at the very last slide the settings of this strategy. First of all, when we try to place our trade, we have to be able to identify the trend. Because if you go against the trend, then the probabilities for a profitable trade are minimized. If you see on H1, H1 provides us the trend, the general direction of the pair. As you can see below, we have stochastic, which stochastic supposedly measures the overbought and the oversold levels. But if you read it the way you are supposed to read it, you will make a wrong trade. Indicators should be used the other way around. So in this case, what do we have? We have a cross of the main and signal line below the 20 level, which for the majority of traders, this level triggers a buy order. But is this true? Is it a buy order here? Of what we see, and if you take this distance a bit backwards, this part here previously was somewhere here, indicating a buy order. And this part here is now indicating a sell order. So we need to trade stochastic the other way around to identify, first of all, the trend on the H1 time frame. So in this case, for us, it's a bearish trend. It's a downtrend, not an uptrend. It's a downtrend because the price and the lines crossed below the 20 level, which means that the momentum here, the downtrend momentum, is constantly increasing and becoming more tensed. So this stochastic, you should read it reversed. It might sound a bit strange what I'm saying to you now, but indicators should be read not the way they are intended to be read. So in this case, we have found that on H1, we have a bearish volatility that will follow. So we are expecting that the price will drop. On the next chart, it's our entry point. So we need to identify, once we know that the trend is a downtrend, we must identify when are we going to place our trade. So we have the so-called zigzag tool, which captures price movements. And this zigzag tool helps us to identify reversals. So in this case, we have seen that the line, the zigzag white line, stopped at this level, and thereafter the price was coming lower and lower. And you might tell me, but why we did not enter at this level? Because in this case, the market, the price, could go even higher and higher and higher. So first we want the price to stabilize. After this stability, you see the price is coming down, lower and lower and lower. After we ensure that we are indeed in a bearish formation, we want to allocate the entry point. So the entry point is the 61.8% of Fibonacci, is the golden mean, is the area where the majority of strong movements take place. Because as you all know, Fibonacci measures psychological levels of the traders. So as soon as the price, we could have also entered at this point, 61.8%. But we have entered at this point, the 61.8% of Fibonacci. So now we place our trade and we have to set two targets, a short range target and a long range target. So the bearish signal was at 1.1317 today, 9 in the morning, Eastern European time, 9 Cyprus time. So our first short range target at 1.1289 and our long range target 1.1194. So we catch two elements at the moment before we move on to another element. The first element is that the zigzag line indicated a bearish reversal at this point, and we do not enter at this point because we want the market to first show us that it's indeed going in a bearish formation. Once we got this confirmation, we place our trade at the 61.8% of Fibonacci. We set a short range target, which is the 0% of Fibonacci, which is a very close range. and a long range target at this level, 1.1194, based on the so-called COG channel tool. Because you see, this tool is otherwise known as the center of gravity tool. So we have a red line and a green line. Since our signal was a bearish one, was a downtrend one, we put our long range target at the green line. If our entry was a buy entry, we would have placed our long range target at the red line. But in this case, since it is a downtrend, we place the long range target at the green line of the COG, the center of gravity tool. So I repeat, we first try to identify the trend on the H1 time frame, and we are using the H1 time frame to identify the trend of the day. And we are using this stochastic as a mirror indicator, as a reflection of the actual graph, not the way that it's supposed to be used. We do not try to find overbought and oversold levels. We are trying to find volatility. We are trying to find aggressiveness in the market. And in this case, it's showing us that the price is below the 20 level, which means that there is aggressive pressure downwards. Once we have identified the trend, we go to the M30 time frame to see our point of entry. We have the white zigzag line, which is a tool downloadable from the MT4. And when the zigzag line is facing upwards, we are expecting when the price will start reversing to the downside to start getting prepared to place our sell order. Once the zigzag white line stabilized at this level, the price was coming lower and lower. So we have a confirmation that indeed there is a strong downtrend momentum. We have the 61.8% entry zone to place our sell order. And once we place our sell order, which in this case it was the 1.1317, we put a short-term target and a long-term target. A short-term target at the 0% and a long-term target at the support zone of the COG tool, the center of gravity tool. This blue line is part of this green and red line. You may not use this specific line. It's just to show you another confirmation that the price is below this center line, which is another confirmation that the trend is facing downwards. And then we have this small red line, which is another form of Fibonacci, but without the levels. So this red line is showing us again the momentum. So today's signal on the euro dollar was a bearish one, a downtrend one, a sell signal at 1.1317. The entry time based on our entry price was 9 o'clock Eastern European time, which is 9 Cyprus time. These are the settings. I will not go through these settings, but whoever wants to download these settings or any help on how to place the indicators on the platform, how to find these indicators and actually not indicators, tools, you can contact ArgusFX at support@argusfx.com. You can contact us and we can show you, I can show you how to place these indicators on the MT4 platform and to guide you step by step on how to implement them the right way. And as I have said previously, it's a matter of each trader how they will use this strategy. If you use it the right way, you will be a long-term consistent winner. If you trade the right way, you can see yourself as an investor and not a gambler. Gambling never brought any good results. So having a strategy, using it the right way, having a stop loss and a take profit target will take your trading activity to a more professional level. And regarding stop losses and take profits, an ideal, let's say, stop loss is approximately 50 to 60 pips. It means that if your trade went wrong 50, 60 pips, you should exit your trade and place a new trade, a better one. Because if you accept a stop loss of 60 pips, you will, after, place your next trade, and if the direction is on your side, you will make 100 pips. So you will have 40 pips profit. So you have to see trading as something which will safeguard you some extra cash on your balance and then on your bank, of course. So a decent stop loss should be 60 pips. A decent take profit could be, as per these indications, as per the COG tool, or depending on your own psychology. Stop loss 60, let's say, take profit 100 pips or 120. But the thing is, if you have made the right forecast, for sure the price will move more than 100 pips. Therefore, let's go a bit back. In this case today, indeed the euro dollar dropped down. So you entered at 1.1317. You could place a take profit of 50 pips somewhere here, exit your trade, and everybody's happy. Or you would have exit half here and leave a remaining of your order to go at this level. If the price is approaching this level and you feel that, oh my God, maybe it will retrace upwards, put a stop loss here. If it comes back, it will close you down with more profit. So the most important thing is trade with the trend, find your entry point, your short-term and long-term targets, or have your take profit targets and your stop loss target of 50 or 60 pips, and you will see that throughout time your account will grow and everybody will be happy. I would like to welcome you once again to ArgusFX. Thank you for joining our webinars. And I would like to see you again on our next webinar, Monday, 4 EET time, with the topic of the importance of volatility in the Forex market. Thank you for your time. Should you have any questions, we are ready to answer. Any questions? Some questions that... And okay, let's go through the questions. Thank you too. Thank you. I hope you got an interesting idea of this strategy. I'm using RSI instead of stochastics. Is that okay? Of course. You see, RSI is similar to stochastic. The way I'm using stochastic, you can implement also RSI, but not to identify overbought or oversold levels. You should use RSI to identify volatility. So if the line of the RSI breaks above 70, place a buy order. When the line of RSI breaks below the 30, enter a sell order. Do not use RSI to identify overbought and oversold levels. But you can use these settings provided in this webinar, trade with a nice and consistent leverage, and you will see that in the long run, you will be profitable without stress, without fear, and the most important, you will minimize greed. Do we have any other questions that before we close this session? Okay, everybody, I would like to wish you all a happy weekend. Thank you for your participation and see you all next week.